I'm Camilla Andersen of the IMF, here to talk to John Lipsky, First Deputy Managing Director of the IMF, about some of the big topics that are being discussed at Davos this year. John Lipsky, welcome. Let's start with Europe's sovereign debt crisis. Based on the conversations you've been having, do you get the sense that people think the worst is over, or are they bracing themselves for more trouble ahead?
I would say they hope the worst is over, but not certain yet. And that's why you've seen some improvements in European markets, but the spreads are still quite elevated. So they're waiting for further action, including decisions by the European authorities on a so-called comprehensive set of measures to deal with these problems in the future, and still looking to see the success of the policy programs being put in place in some of the countries, not Greece and Ireland, but others that are under strain.
More generally, does the IMF think that advanced economies have done enough to consolidate their fiscal positions?
Oh, not at all. As we made clear in the Fiscal Monitor update, and we've made clear for some time, all of the advanced economies face significant challenges of medium-term adjustment of their fiscal accounts. What we've said is it's time to start laying out credible plans for that medium-term adjustment.
How concerned are you about overheating in emerging market economies?
Well, we're certainly concerned. In one sense, it's not surprising. They've been growing rapidly. They have, in general, applied expansionary monetary and fiscal policies to help counteract the contractionary effect of the global crisis. And with restoration of rapid growth, many find that their margins of excess capacity are either exhausted or nearly exhausted. Now, the recent run-up in commodity and energy prices has pushed headline inflation upwards, not as high as it went in 2007-8, but already in the aggregate, headline inflation in emerging markets is higher than it was before the onset of the 2007-2008 crisis. So the worries are incipient, but they are worries nonetheless.
You mentioned rising commodity prices. That's obviously a very big topic right now. How concerned are people on the ground that these price increases will translate into an inflationary spiral?
They're increasingly concerned, and also concerned by the evidence that attempts to assuage the impact of commodity price rises on populations have in fact created political strains. So there's a combination of worries, the price rises themselves, the impact they'll have, and the challenge that they pose for authorities to adapt appropriate policies on the demand side. Of course, part of the problem is structural issues on the supply side. In 2008, we had examined this situation, concluded there were structural issues on both supply and demand side, said that the global downturn was going to reduce these pressures, but if there were no structural improvements in markets on the other side, a return to growth was likely to create upward pressure on commodity prices, and that's just what's happened.
What are the views on the ground about the risks posed by continuing global imbalances? We had President Sarkozy of France calling yesterday for a bigger role of the IMF in that regard.
Yes, he did, and I would say that there's a clear sense that the return of global growth has been welcome, but has not solved some of the important problems. And one of them being that there is no sign that in the post-crisis period that the recovery is going to reduce global imbalances. And there's a lingering sense that was one of the causes of concern and instability that led to the crisis. So there's a desire for policymakers to address the underlying issues that gave rise to these imbalances.
Finally, I wanted to ask you, what do you think will be on the G20 agenda for the IMF in the next 6 months to come?
Oh, a lot is going to be on the agenda. First of all, the very crucial work on the framework for strong, sustainable, and balanced growth and the mutual assessment process. First, the agreement on indicative guidelines to guide the analysis, the assessments, if you will, then the call from the G20 leaders for IMF assessments on monetary, fiscal, structural, and exchange rate policies of the G20 countries that will be a key input into their peer review mutual assessment process. In addition, the international monetary system studies under the G20 are likely to bring to the fore questions about potential further improvements in the financial safety net, for opening up the issue of whether there's sufficient consensus to agree on a code of conduct or guidelines with regard to international capital flows, and finally, an examination of the role of the SDR. So we're going to be absolutely at the center of this process. And I must say, it's quite notable. Comparing Davos from 2 years ago, a year ago, the mood is certainly more optimistic than it was, but it's also striking of how cognizant and aware people are of the, or the attendees here are, of the role of the IMF, and how they're, it's quite notable how they're looking to us to play a critical role in addressing all of these issues.
Thanks, John. It'll be interesting to see how all these issues play out over the next 6 months. But that's all for me. Thank you so much for joining us. I hope you enjoy the rest of your stay.